Solar energy is India's biggest wealth creation theme right now, and Waaree Energies is the stock at the center of it. Now let's break it down. Waaree Energies is India's largest solar module manufacturer, 22 gigawatts of capacity. Its revenue comes from modules, EPC contracts, and power generation. Here's what moved this stock. The US Commerce Department slapped a 123% anti dumping duty on Indian solar exports after a petition from American manufacturers claiming India's modules were being dumped at unfair prices. That knocked Waaree's stock price from 3,865 to 2,345. The crash is explained, but here's why the recovery might be real. India mandates domestically produced solar cells from June 2026, direct order flow, not US dependent, and the quarter 3 profit jumped 115% to 1,062 crore and the revenue doubled to 7,565 crore. The full year results are out tomorrow, which will act as a live catalyst. New 3 gigawatt cell line in Gujarat just went live, and 3,900 crore gas plant underway. There's a full vertical integration in progress. However, there is a certain risk involved. The 123% duty is still preliminary and not final. And also, there is a new CEO and CFO both joining in March 2026. So, we need to watch the execution. When you look at the revenue growth over the past 5 years, it's an increasing trend. It increased from 11,000 crore to 14,000 crore. So, fundamentally, it is a strong company. When you look at the technical analysis and all the three time frames, in the monthly chart, we see that there is a massive impulse from 2000 to 3,865 on the US export momentum. Duty news, however, triggered a clean correction to the 3,345 region in the monthly chart. Current monthly calendar is strongly bullish with a volume at 31.67 million, highest in months. And market is saying the domestic story replaces the US loss. So now we'll look at the weekly chart. The 2400 to 2600 absorbed every seller. The multiple green candles with rising volumes were off that base. That is the institutional accumulation and now the retail bonds. Now you look at the daily chart. From the February lows, we can see that there are clearly higher highs and higher lows forming. The 3150 to 3200 region will act as a support now. It was earlier a resistance that is broken with the volume, and that is why it is slipped to a support. About that level, we have the 3,500 to 3,557 supply zone. Prior distribution was in this area, so price is testing that region now. When you look at the RSI, it is 60.27 for daily RSI. The momentum zone, it is not overbought. There's room to run towards 70. So the breakout candles of the lows are heavier in volume than the sell-off candles. Buyers are overpowering the sellers. Now I'll be setting up a GTT based on this logic. I will not be entering at the current price. I will wait for the price to come within a range of 3,050 to 3,200. So I will be entering the stock at around 3,175. 3,175 I will be entering the stock, and I will be placing my stop loss and target price using my OCO. So the stop loss would be 2,950 below the weekly demand zone. If the price loses that level, the structure is broken, thesis is invalid, so we exit without any emotion involved. And I will be setting my target price to 3,625. That is just above the resistance level, giving the trade room to break and extend towards prior highs. So I have set my stop loss and target price as well, giving risk per share of 225 and reward of 450. So the risk reward ratio is about 1 is to 2. The only way a trade should be, the only way a swing trade can take place is the ideal ratio. So I will advise that we look at the quarter 4 results that will be coming out tomorrow, and also look at the duty that is being imposed. We have to size our position first and enter the trade accordingly. I'll advise you to do your own research and trade safely. If you find this useful, please like, subscribe, and drop your own stock request below. Thank you.